Hello everyone and welcome to this week's weekly technical analysis video at xm.com. Machilias Georgolopoulos, and today we're going to have a look at the Euro Pound, Aussie US Dollar and US Dollar Yen pairs. Last week was quite busy, predominantly due to the Fed meetings and Friday's US labor market report. This week looks a bit quieter, however, there are some key data releases coming up, and we will talk about this. Starting with Euro Pound. Last week the Bank of England kept its rates unchanged despite the high inflation rate. The statement and the overall stance essentially kept the door open for further tightening down the line if needed. However, there are growing concerns about the growth outlook. In this context, on Friday we get the preliminary GDP print for the third quarter of 2023. It will be important to see if expectations for a negative print get confirmed. However, there is a sizable risk for an even weaker outcome. Now, turning to the chart, as we can see, this pair has been trading higher since the August 23rd low. It is testing now the support set by the August 23rd ascending trend line. If we get a good set of data, especially GDP on Friday, then the pound bulls would try to overcome the August 23rd ascending trend line and then test the support set by the 0.8615-0.8647 area. If successful, then they could have a go at pushing the Euro-Pound pair towards the 2023 lows and more specifically the 0.8492-0.8504 area. To be fair, the momentum indicators appear to support the pound bulls intention. The RSI is below its midpoint, the average directional index movement is pointing to an aggressively weakening bullish trend in this pair. And of course, the stochastic has broken below its moving average and it is heading aggressively lower. On the flip side, the Euro bulls are keen on continuing, of course, the current up leg. They would try to defend the August 23rd ascent trend line and then overcome the 0.8687-0.8720 area. If they still feel confident and hungry, then they can have a go at pushing the Euro-Pound pair towards and above the 0.8794-0.8815 region. Now, moving to Aussie US dollar, and the RBA is meeting tomorrow. Expectations are for a 25 basis points rate hike. The market is pricing a sizable probability of this happening. However, it's not completely and overwhelmingly expected. That probably means that if indeed the RBA hikes and a hawkish statement is also published, then we could see the Aussie US dollar pair getting a serious boost. In addition, China has some key figures coming out this week, and on Thursday we get the October CPI. The Aussie, of course, is affected by Chinese data, and considering the last 3 to 4 months concerns about the Chinese economy, this week's data will be important. October CPI is expected to show a negative yearly change, which is probably going to mean that there will be even more concerns about the level of domestic demand in China. Now, looking at the daily chart, we can see that the Aussie has been aggressively moving higher after testing the November 3rd, 2022 low at 0.6271. It is essentially now trading at a 3-month high. A combination of a hawkish hike by the RBA and upside surprises from the Chinese data mean that this pair could get a real boost. The Aussie bulls will of course try to overcome the 0.6506-0.6561 area and then test the resistance set by the 0.6609 and by the February 2nd, 2023 downward sloping trend line. On the other hand, a dovish rate hike by the RBA and even decision, of course, to pause, along with weaker Chinese data, will probably put a dent in the current bullish sentiment in Aussie US dollar. Aussie bears would try to overcome the 0.6458 level and then test the support set by the 0.6391 and the 0.6356 levels respectively. We have to acknowledge, of course, that at this stage, the momentum indicators are mostly on the Aussie bulls side. And most crucially, the stochastic oscillator is edging aggressively higher and has reached its overbought territory. The other two indicators, the average directional movement index and the RSI, are similarly supportive of the current up leg. However, there are some initial signs that maybe the rally has been too aggressive. Finally, turning to the US dollar yen pair. Last week we had another BOJ meeting. They did a small change in the yield curve framework. However, the market was not really happy. There was somewhat disappointment about not being more hawkish at the statement or even opening the door to an eventual rate hike. This week, we get earnings data and of course, we get the initial minutes from the aforementioned BOJ gathering. Earnings data are crucial for the BOJ. BOJ members have been very vocal about how important it is to see very good yearly increases at the earnings data, eventually giving the excuse to gradually, very gradually, start to remove the current accommodation provided by the BOJ. In this context, the minutes we get later on this week will give us another flavor of the discussion behind the yield curve control, of course, change, and of course, how the policy board feels about the overall economy situation in Japan. Amid these developments, of course, the market is trying to digest last week's Fed meeting. And as we can see from the chart, the US dollar yen pair tested essentially the October 21st, 2022 high at 151.94. Momentum indicators remain mixed. The average directional movement index is still pointing to a trendless market. The RSI is exactly at its midpoint. And the stochastic, although below its moving average, it seems to be edging sideways. The market is in a waiting mode. It's a state of indecisiveness. Now, if we get positive earnings data and the minutes prove to be a bit more hawkish than the market initially thought, then the US dollar yen pair could finally break the upward trending channel that has been in place since March 2023. Of course, the yen bulls would try to overcome the 147.71-148.74 area and then push this pair much lower. It would be a very important target for them, essentially as they get closer at 144.99-1.46-65 and the March 23rd, 2023 upward sloping trend line. On the flip side, of course, weaker data releases and a dovish set of minutes will allow the dollar bulls to essentially regain market control and defend the lower boundary of the upward trending channel. They could have a chance of overcoming the 150.15 level, record potentially a new 2023 high, and then test the resistance set by the October 21st, 2022 high at 151.94. That's all for today. Thanks a lot for watching and good luck with your trading.